There we go. We are live with Mark Stansbury of partner at Stansbury Weaver. Mark is this. Allie had shared this story on Instagram yesterday when she was, for the first time in maybe history, lawyers are very interesting to hear from. Would you say? Would you say this is like the most interesting time to hear from a business lawyer?
Yeah. Now in the OJ trial, I would say.
The OJ trial, yeah.
The two times.
This is you're like you're a weatherman, like a weather reporter during a storm locally,
Yeah. People don't pay attention to tax lawyers very often at all. So
yeah. So now here you go. Well, cool. So Allie had shared this on Instagram when she was talking about this particular thing. For those of you who are jumping in, you can hop in and ask a question if you want to. We've got a whole bunch of questions that we will be working through here pretty promptly. But if you want to ask a question, feel free to drop it in the comments below. Allie had shared the story. I'll get to my point where we had started working, or you became the Wonder Jam's lawyer. You actually were Allison Lehman Design's lawyer before the Wonder Jam was even conceived, and that you and Allie both started doing your own thing kind of at the same time. And we got to know you then. I believe there was a barter of contract review for business card design. And then hilariously,
Absolutely.
Allie and you got lunch to kind of talk about things, and she forgot her wallet and made you pay for it, which is our favorite story. And so we have been in the same spirit. We are going to get a little bit of information out of you. We're going to steal a little bit of your time and answer some questions for folks. So there's a lot of confusion and things going around the CARES Act. There's a lot of information that's all over the place, some of it true, some of it not. And so we wanted to bring you on here to kind of clear things up. Why don't you talk a little bit about kind of what you do, your firm's area of expertise, who you typically work with, and then we can just start tackling questions.
Yeah, awesome. So my name is Mark Stansbury, like Adam said. I'm a partner at Stansbury Weaver, and we are a business law firm. We don't litigate, we just handle transactions. We mostly work with small businesses and mid-sized businesses. We work with some startups that are raising venture capital, and we work with a lot of solo entrepreneurs, designers, copywriters, all that, bloggers, all sort of thing like that. So across the spectrum of businesses on the smaller side, we handle everything from formation to contracts, tax planning, raising capital, and all that. So the CARES Act is really, it applies to a lot of our clients. There are provisions that apply to all different sizes of businesses, but most of what you've been hearing about is probably related to either the individual grant that everyone's going to get a check from the feds unless you phased out, or the business stuff that relates to loans through the small business, through the SBA, sorry. So I figured today I would run through a quick rundown of the CARES Act, the main things that apply to small businesses.
Got it. So when we're talking about this, we're not talking about, you see a number like $1,200 checks floating around for just individuals.
Right.
There's someone just asked if this will be recorded. It definitely will be recorded for sure. And it will be available still on YouTube and Facebook or wherever you're watching it. So it will stay there. So if someone hears a child screaming in the basement, which was actually what the comment said, you can go address that if you need to. So there's a $1,200 check that's going around. That number floats around, and that's for individuals. And that's not what we're talking about. We're talking specifically about the pieces that apply to small businesses. Why don't you run through a bit of that?
Right. Yeah, but I think the individual thing is worth just noting briefly because that'll benefit business owners. It'll also benefit your employees if you have employees. So anyone who's making less than, if they're filing a joint tax return, less than $150,000 a year, individual return less than 75, and it phases out above that, you're going to get either $1,200 or $2,400 plus $500 per dependent child. So that's in addition to all this loan stuff that'll help out. But let's jump into the loan. So the main programs under the CARES Act, which was signed into law on Friday, are the Paycheck Protection Program, which is a loan to cover, it's a short-term loan to cover 2.5 months of payroll, basically, and the Economic Injury Disaster Loan, which includes the grant component that I'm sure everyone's heard about, this $10K grant. Then there's also loan deferral. So if you have an existing SBA loan, the SBA will pay your bills for 6 months, pay your loan payments. And then sort of related to this is unemployment benefits, which the law extended to sole proprietors and independent contractors, which is usually not the case for unemployment.
Mm.
So circling back to the Paycheck Protection Program, the way this works basically is you take your average monthly payroll over the past 12 months. It's not clear from the law whether that means the 12 months leading up to the day you applied or it means 2019. That becomes interesting because some people are asking whether they could deposit a bunch of money and make a huge payroll right now to drive up their average. Probably not.
Yeah, you see, even in the questions that we got behind the scenes was a bit like, you could tell people were like, can I? There's some loopholes.
According to the law, you probably can, but according to the SBA application form that they released yesterday, you probably cannot. So I would be careful there. But anyway, you take an average of your monthly payroll and you multiply that by 2.5. If you haven't been in business for a year, you can use a shorter time period, which is the beginning of this year. So January and February of this year, you can use and take the average from that. And if you're a seasonal business, then you have a specific time frame that is it's in 2019, but it's a specific time frame that's intended to capture seasonal swings. So you take that average, you multiply it by 2.5. You can also include in there refinance if you already got an economic disaster loan from this year, from the prior bill that was passed. Feels like eternity ago, but I think it was 3 weeks ago. You can refinance that as well. But for most people, it's just going to be 2.5 times your average monthly payroll. And that can be used to cover anything, including it's a pretty broad spectrum of things that it can technically be used to cover, because it's anything under this traditional 7A loan program for the SBA, which is their main lending program. But the main things that's intended to cover are payroll, including salaries, commissions, tips, health benefits, and so on. Also cover mortgage interest for a business loan, or rent, or certain utilities, covered utilities, all of which have to have been in place on February 15th. So you can't sign up for something now and get it covered. But everything else, for most people, that's going to be covered. The loan, the Paycheck Protection Loan, has a max of a 4% interest rate, and payments are deferred for 6 months. But the real benefit is if you spend the money in the first 8 weeks after you got it, if you spend the whole loan in the next 8 weeks after you got it on payroll, rent, utilities, mortgage interest, any of those qualifying things, then the SBA will forgive the loan entirely. So you won't have to pay back any of it. The way it's written, what it looks like right now is you have to apply for forgiveness. So you're going to have to provide evidence, certainly, and some sort of application that hasn't been released yet to apply for the forgiveness. But in all likelihood, the SBA, or the lending banks, rather, that facilitate this for the SBA, are going to be fairly lenient, is my guess, because if you qualify for forgiveness, the feds are going to pay you back your full loan. And if you don't, then you're going to have to pay back your loan. And I think most banks would rather just get the money from the feds.
Right. Yeah. So the lender would be receiving money either from you or from the government one way or another, or the SBA one way or another.
Yep, exactly. And the nice thing about this is it's not considered loan forgiveness income. So some people may be concerned that if they have if it's a large loan, then if you've had loan forgiven in the past or written off, you owe income on that technically. So you have to pay tax on that. But in this case, you do not have to pay tax on it. So it's essentially 2.5 months of free payroll if you play it right and just follow the rules. There is a caveat here, which is the amount of forgiveness will phase out, or not phase out, sorry. It will draw down proportional to the amount of layoffs and pay cuts that you implement over the next 8 weeks. So if you have fewer people on payroll now than you had on average last year, you will get less forgiveness proportionally. And if you've cut people's pay more than 25%, the same thing will apply. There is a correction period. So if you get the numbers back up, either raise people's pay back up or hire more people by June 30th of this year, then the forgiveness amount will go back up to 100%. So you have a window of time there that you can make a correction if you've already laid people off. I know a lot of people have already laid off a lot of their staff, if not all their staff. So they may worry about this forgiveness, but if you get the loan money and you can bring people back on board, that's essentially what the law was intended to do.
That's cool. Can I interject? Because there's a couple of questions that we got in the document that kind of pertain to this. So there are some business owners who maybe they themselves were not on payroll, but they were compensating themselves through owner's draws, but not necessarily on payroll. And then others who talked about, does it need to be hiring back? Because some businesses does it need to be hiring back the same people?
So on the second one, it does not have to be hiring back the same people.
Cool.
So yeah, you can bring on anyone as long as the numbers are back up. The salary component may weigh in if you're hiring people at different levels. So something to be careful of there. The law is actually sort of ambiguous as to whether if you hire people at different pay rates, that will count against you. But I would presume at this point that it does.
Yeah, that was like the thing of because some of the language seemed to be about like what was your total payroll out, and then what was the total number of like full-time employees or full-time equivalent employees that you had, and it doesn't seem like in those different applications we're asking kind of different questions, or different forms on the application we're asking for different pieces of that information. And would you say it's not crystal clear about which of those numbers to be figuring?
Yeah, there's a lot of stuff in this law that's not crystal clear.
Right.
They wrote it in a week, so it's 880 pages that they wrote in a week. So
yeah,
there's some ambiguity, and we're getting some guidance from the SBA. They issued a little bit, but it wasn't super helpful. But I would say the safe way to think about it is your forgiveness is going to be reduced if the number of employees that you have on payroll right now is lower than last year. That's
cool.
Easy to calculate, relatively speaking. Or if your overall payroll is lower. And I think that the way they count that is like on a person by person basis. It's a 25%. You have a 25% cushion that you could sort of cut people's wages a little bit, and it doesn't apply to any amount over $100,000. So if you have an employee who is making 150 and you cut them to 100, then it shouldn't impact your forgiveness the way it's written.
That's go ahead.
Go ahead.
No, I was going to grab some other questions, but you can keep.
No, the first question I didn't actually answer. So if someone was paying themselves, there's a lot of questions around if you're taking draws, is that covered? The answer, like a lot of the stuff is just not clear, but I would say that I would feel comfortable moving forward on the presumption that it does apply if it's your regular pay.
Yeah.
If it's like irregular pay because you got a big project or whatever, probably not. But if that's how you take your monthly draws or your monthly pay in lieu of a paycheck, then yeah. So self-employed individuals and independent contractors are covered by the payroll, the Paycheck Protection Plan. So you should be able to apply if that's how you earn your ordinary income.
We had a question that just came in, but can you just really clearly, and the Wonder Jam was in this boat, as we had a couple of people who were employees or classified as employees, and others who were contractors who worked on project to project. This does not apply to people who are 1099s, correct?
It does. Absolutely. No, it does. Yeah.
So but I mean, if I'm thinking through what our payroll was, I include 1099 teammates in that.
Yep, absolutely. Cool. So you can include anyone who is on regular 1099. If they just did one project for 2 months last year, I mean, maybe you count that as part of the average, maybe cool. Not. I would say be careful of anything that really skews your average a lot, if it's some huge project or whatever. But in general, it is absolutely written to cover contractors. I think the law basically recognized that a lot of people are in the same situation that you were in, where they have people who are on payroll and then people who are contractors, and some people want to be contractors and not on payroll for tax reasons. And there's obviously a lot of issues with that, with the IRS and fighting and back and forth. But I think for the purposes of this law, they just punted and said, cool. If you're essentially an employee, whether you're a W-2 or 1099, you count towards the payroll and you'll get covered.
Got it. The person who asked that question was a yoga studio owner, and I know there's a number of those folks who pay attention to our stuff. So, and most of those instructors typically end up being 1099. So just figuring all that out. It doesn't mean like you're going to be, opening your yoga studio next week, probably. But yeah.
And stuff.
I guess to follow up on that question is so we can use a yoga studio as an example, but a restaurant is a great example. There's a number of great examples of some of these things are grants for rehiring people or hiring or keeping people employed over the next 8 weeks. And that is to be forgiven if you use it for those certain things. What if those people don't work, or maybe like a yoga studio example, you don't have like that stuff for them to do, like you're not having those classes for them to instruct. Is there much guidance on, does a person have to work?
They don't have to work. So three things I'd say on that. One is, even if none of it's forgiven, the loan terms are pretty generous. Cool. So it's I think it was a 10-year term. It's a 4% max interest rate, and you have 6 months deferral on any payments whatsoever on it. So even if it ends up just being a straight loan, the terms are pretty good, and you can kind of amortize out your costs for what hopefully is not too long of a stretch here over a long period of time. The second thing is, if you want to get some of the forgiveness, you can spend it on rent and utilities. So that will help cover some of it. The SBA, in the guidance that they just released, said that they wouldn't expect more than 25% of forgiveness to go to that sort of thing, rent and utilities, as opposed to payroll. I don't have any idea where they're coming up with that, because the law doesn't say that. But, if you want to fight the SBA on it, that's just a heads up. But also, if you want to bring people back on board, they don't necessarily, like in the case of a yoga studio, if there's anything you can have them do, like if you could pay people to do live streams, if you can pay people to create content or anything like that that's not normal in the studio stuff, then I would say that's fantastic. Even if it's like having someone come in and help paint the studio while you're not open, if you can put people on payroll and pay them, then that will count towards your forgiveness, and I'm sure they'd appreciate it too.
I love it. Yeah. Tell me about, so there's, and this, we just got a question that came in about someone who'd filled out the economic injury disaster loan yesterday, and the new form that came out was really easy and quick and swift. The one that I filled out a couple weeks ago was not that. But that's fine. So can you talk about, like, should someone submit for one program, all of them in a particular order? What kind of guidance have you seen to be useful for people?
So the SBA hasn't issued any guidance on this explicitly. My hunch is that you can apply for both of them. What we do know is explicitly is you can apply for both the Paycheck Protection and the EIDL program for the same purpose. Cool. So you can't use them both for payroll. You could use one for payroll and one for rent. Basically do the Paycheck Protection program for payroll, use it if there's any left over for rent and utilities, and then use the EIDL loan for any other purpose, whether that's whatever, to buy supplies. It explicitly says if the cost of your supplies go up, you can use it for that. You can use it to cover any other pre-existing obligation, basically. But be careful that you don't use it for the same purpose. And then the Paycheck Protection Program section of the statute explicitly says that if you have a pre-existing economic disaster loan issued now or in the last month or two, that will not preclude you from getting the Paycheck Protection Program. And in fact, in the EIDL section under the grant program, it references people later applying for the paycheck program. So we know you can at least do the economic disaster loan and then go to the paycheck one. Not clear if you can do both at the same time. My guess is, given the way just the atmosphere right now and the purpose of this bill, that you can. But if you want to be safe, I would say do the economic one first and then the paycheck one after that.
Cool. Love it. Can we just do some rapid fire questions? Does that sound good? For those of you who asked questions so far, normally we throw those up on the screen, but for the sake of you all are business owners with a bunch of other people watching this, I'm going to not do that normally, just for fun. But I'm still addressing all of them. And also, some of you have questions that have come that are also very similar to something I'm about to ask as well. So we're not just taking those right away. There's one about urgency. So this is kind of the last question at the bottom of that sheet that we looked at. So if you read, there's places that are like, go, and the thing I had told people 2 or 3 weeks ago was like, go apply for everything and get in line and then see what happens. There's a bunch of information about like, oh, there's like a limited amount of this money, it's going to run out, so you better go get in line or whatever. How do you advise, or how would you say someone might be able to think about, should I just go do this and see what happens? Should I like go sit and adjust my business plan with some of these potential figures in there and then go show up, or what? How much of a priority is that?
I would say just go now, do as fast as you can. This is the one big factor that cuts against what I just said about doing the 2 loans sequentially instead of at the same time, that the money is presumably going to run out because everyone's interested in getting it, particularly the forgivable money, and then the 10K grant under the EIDL loan. So we didn't even touch on that, but I'll bring that up very quickly here. So if you apply for the economic injury disaster loan, then you can select that you'd like an advance on that. and that'll get you up to 10K. It looks like the SBA is just treating that as 10K. The law actually says up to, so I don't know if anyone will get less than that, but something to be aware of. If you apply, you may not get 10K, but that 10K is a grant. So whether you're approved for the loan or not, you don't have to pay it back. If you get the economic injury disaster loan and the paycheck protection loan, this is what I was alluding to a minute ago, your forgiveness will be reduced by the amount of your advance. So if you get the 10K, you're not also going to get the full amount of forgiveness. It'll be reduced by that 10K. But if you don't get the paycheck loan, then you won't have to pay back the 10K at all.
Cool.
Anything on top of that will be a loan that you'll have to pay back, and it has a 6-month deferral and generous terms and all that too.
Yeah. So go do it. I think there's this weird, I get when I'm talking to people, business owners, were like going and getting an economic injury disaster loan or an SBA loan is like not in the realm of normal for a lot of people. This is like not a normal time, and the federal government and the SBA are acting in very not normal ways. And so this is, I tell people, I'm like, you're going to do things that feel like what you would do in the midst of defeat, but this is not like everybody. This is how this is all sort of operating at this moment. I would say on like a sort of like a broad political and ethical standpoint, like I can understand people having general opposition to like just taking money as a handout when your business is relatively strong, but explicitly the way the law is written, that Congress just assumes that everyone is going to be hard hit by this, and what they want to do is just put money in people's hands. So, if you've been a taxpayer up till now and a good citizen, I wouldn't consider this like you're not like milking the system. You're doing what the system's designed to do, which is just try and keep you afloat for a while. And if you don't need the money and you take it out, then just pay it back. But I think it's in every business's interest to try and get the money now. And, especially if you can keep people on payroll, that's even better. Yeah. And it's one of the things that as I think about my own business is this is a federal government. I'm thinking of it as the government trying to work out not unemployment essentially, but like doing it through some of the SBA and other channels rather than just directly. And so you can think of yourself a little bit like you're handing that pass through some. So the other thing, we had a comment as well saying we don't know what the exact reaction to any different industry or markets is going to be. Like this COVID-19 is not over yet, and the impacts of it economically are not over. And so someone had encouraged like jump into it because there's going to be a future change as well that we're not sure about. Talk to me a little bit about, so someone asked about double dipping, which in their terms was, vendors are going to be applying for this, landlords are applying for this, people who I pay, people who pay me are all sort of getting this. Is there any restriction, or is there any way to think about, I don't have to pay this person because they're probably getting it too, or any of that? Or is that, from a legal standpoint, does that matter?
So the Paycheck Protection Program requires certification that you're not also receiving you're not receiving money separately under the same program, basically. Okay. So if you have this is where it would really come into place. If you have independent contractors who are on your regular staff and you borrow money to pay them, and they as independent contractors try to borrow money to pay themselves also, then they're going to be blocked from doing that, or they're going to have to perjure themselves on the form. Right. So that's prohibited. If they want to take out an economic injury disaster loan, if they're independent contractors, they can do that. It's a loan. They'll have to pay it back other than the grant component. And the grant component is sort of like Adam just said, it's sort of like a unemployment handout, basically, like try and keep people going. So funnel unemployment through the SBA. Yeah. So other than that component, they could take out a loan. You could take out a loan.
Cool. But probably be in communication with the contractor, especially if they have significant revenue otherwise, and understand if they're also receiving funds from a similar program. Tell me about. Well, actually, let me say just one more clarifying point on that though. If you take out a paycheck loan and you include that average wage that includes that contractor, but you don't spend it on that contractor, then they could also take it out and cover themselves. So if you end up spending it on rent and utilities, and you don't keep them around, then they could apply for it themselves and they wouldn't be double dipping. So stay in touch, talk with them, make sure you kind of coordinate that. Got it. What about if I have this is another question that got thrown in. If home office, rent and utilities, So some people are working from home or operate remotely and have operated remotely for a while. Is there any distinction amongst like paying your home internet bill versus your office internet bill?
So there's no guidance on that, and the law doesn't talk about that. But the way I would think about it is the way that you treat it as deductible for the IRS. So whatever portion of your house you have allocated to that, then you could probably get away with covering that component, but there's not explicit guidance. So I would feel pretty comfortable with that, but there's always that little risk.
The police, not the policing or the verification of those expenses are going to happen after the fact when you are applying, or they're looking to see what percentage of that loan is forgiven. So you will have to defend that at a later date, though we don't exactly know what specific questions will be asked at that later date yet. Tell me about, so for the SBA, all of the SBA loans that you talked about, you need to go work with the bank or lender, right?
Yes.
Don't go work with, you've given me some guidance of there's going to be a lot of sort of almost predatory lenders or other people who are, it makes it easy for people to pop up and sort of promise that they'll help with these things or do these things sort of for you. A person needs to go find what do they need to be looking for?
Yeah, so it has to be a certified SBA lender.
Cool.
Most banks are lenders. There are other organizations that are SBA lenders. There is also there's a concept of an agent in the law. And I think most of these people who are going to be doing like cash flow loans and stuff like that are going to fall under this agent thing, where agents are allowed to earn 1% of the loan amount and the lender's supposed to pay them. But they've made these forms relatively simple. I don't think anyone really needs an agent, and you probably shouldn't be paying anyone to help you. Maybe like your CPA. I'm not going to say your lawyer, but maybe your CPA you could pay to help out. I mean, for the most part, like even on traditional SBA loans, we as a law firm don't help out that much because it's mostly just business questions. So I would say most of that you can handle in-house and you don't need to pay anyone. So look out for that. If someone seems like they are not legitimate, then they probably are not legitimate. There's going to be a lot of bad behavior around this. There's just so much money appropriated that you can guarantee it.
Yeah. Yep. And there's a lot of, like we're talking about, there's a lot of question marks still about how this gets worked out. And I think one of the things that you and I both seen around the internet is that there's a lot of information that feels very definitive. I have people call me every day telling me I need to do something because obviously this does X, Y, and Z, where there's a lot of question marks left in those. We're just trying to, it was why we had Mark on here is to help clarify some of those places. Tell me about.
On that point really quick, I'll say that, so even going on, like you go on Reddit on that small business subreddit, and there are people who say, I talked to the SBA or I talked to my lender and they told me this, and what the lender's telling them is just wrong. Like this is a tax advance, or this is just on like the loan deferral. There's a large discussion on there about the loan deferral. So if you have an existing SBA loan, the SBA is going to pay your loan for 6 months. They're going to pay principal and interest on your loan as if you were paying it. You're covered for 6 months. So lenders aren't really up on what's going to happen there, I guess. So they're providing a lot of misinformation, but Congress appropriated $19 billion to cover that for 6 months. So the money's there and it's pretty explicit in the law. So just to say that you'll hear misinformation, you'll hear information that sounds like it's legitimate, and for people who should know better, but there's just a lot of confusion right now. So be careful.
A freelancer, I'll go to another question. A freelancer is considering hopping into unemployment at this moment because that's for the first time open to contractors, or the EIDL or the 7A loan and all the things that are kind of filled in with that or that are included in that. Does it matter? Would you say do all of them, do none of them? Like, how does a person think about all of that?
So we don't know exactly. And part of it's going to be, how does this play out over the next couple of weeks? The payroll, or I keep calling it payroll, the Paycheck Protection Loan is not open to independent contractors until April 10th. It's open to other businesses April 3rd. So there's gonna be a little bit of a gap there. That may be to discourage people, I'm not really sure, or just to try and make sure the money goes to businesses with employees. The EIDL loan is probably, I would check their state unemployment office website and maybe talk with someone there just to make sure that's not going to be a problem. But if it's not going to be a conflict, I would start with the economic injury disaster loan and at least try and get the 10K advance. If you get more than that, great. If you can use it for some other purpose that's not unemployment, great. If not, just sit on it and pay it back because the rate's so low, you basically break even. And then unemployment as a last effort. There is ambiguity under the paycheck program about whether an independent contractor without any employees can get the benefit. It seems to suggest that they can, but the way that the other sections are written, it's sort of similar language, but that references employees, suggests that maybe not. And we have no guidance on that at all, which is unfortunate. So something to be aware of. I would say definitely feel like move forward and apply for it. The worst they can say is no for that. But it's just not clear how the SBA is going to treat that. If you're just an independent contractor or a sole proprietor with no employees at all, can you get it? I think my gut feeling is that unless national sentiment changes dramatically, like there's a virus or a vaccine in a week for this, then everyone's sort of going to be leaning in favor of providing more money to more people and not trying to be super strict.
Yeah.
That's the way the law is written, and that's the way the SBA seems to be treating it so far. Yeah.
No, that's the truth. I'll do a last question, and then we can let you get back to lawyering for the day or being a parent. I think they're both it's like, dude, this whole thing, like we have so many clients who are parents who are just like, this whole thing is wild.
It's
for sure.
It's pretty rough. Yeah.
Actually, I'm going to do 2 questions because try and squeeze more out of you. Someone asked a question about buying a home. So supposedly supposed to close on a home in the next 2 months and was nervous about any of this activity changing their, any of that stuff. So the person's talking to their loan officer. The loan officer doesn't know a lot of information. Does it seem like there's anything in this that would translate to someone's sort of like mortgage and or personal liabilities as they sit now?
No. So my guess is it would have no impact because there's no personal liability on these. So there's no personal guarantee and there's no collateral obligation either under the Paycheck Protection Program or under the EIDL loans up to $200,000. So as long as you're not taking more than $200K in loans, and we don't know the actual formula for the loans, but it looks like it's going to be 50% of your profit from last year. So that's what I'm seeing floating around, but not from anything official. So TBD, but if you're taking less than $200,000, there's no personal guarantee and there's no collateral obligation. So it shouldn't impact your credit. The only exception to that, I guess, is there's sort of a back end personal guarantee. If you use the Paycheck Protection Program for something that's not at all covered, then they reserve the right to hold you personally responsible for that. But, that's essentially fraud. So fraud.
Yeah.
It shouldn't impact you personally.
For the record, Mark is not advising fraud, nor has ever or will ever.
I'm not advising one way or the other.
I'm not advising. He's not advising or giving advice. That's perfect. I was going to say the last. No, I feel like that's a good question. I was trying to think if there's anything else. So the main things we would be telling this. I'm sitting and listening to this. Somebody. Oh my gosh, people are answering each other's questions at the bottom. Yeah. So Ben, you just asked a question, or Benjamin. There's Mark had answered that kind of back in the middle of the broadcast about or this live stream about double dipping. To take action, 1, go fill out your EIDL, the new one. Don't get the old one. The new one's way faster. I filled out the old one, and I think I'm gonna fill out the new one too, because I don't know if I'm gonna hear back from. I filled out the old one before like the wildness happened.
Yeah, it's a lot shorter, and the program's kind of they've changed the program somewhat. So I would say if you fill out the old one, you have all the information now to fill out the new one. So it'd probably be worth doing that.
Yeah, I saved all that forms and everything in a Dropbox folder, and a lot of it is duplicated in the 7A loan. So the first thing a person would be doing, or I would tell a person to do, is go the economic injury, go do that first. The second thing would be go hit up the 7A program. Is there anything besides those 2 things that would be an obvious next step for a business when it comes to the CARES Act?
So those are the 2 main things. And then sort of more tangential things are if you have an existing SBA loan, whether it's current in payments or it's in deferral, you'll have 6 months covered. But also if you get a new loan. So if you've been working on getting a loan, like you were working on a loan in January and then it got put on hold, if you still could use the loan, if your business is still operating more or less, and you can use the loan, move forward with it because the SBA will pay your first 6 months of payments.
Mm-hmm.
And that's not a deferral. They're not kicking it down 6 months. They're going to make 6 payments on your behalf. So that's for brand new loans that are started this year. So that's something worth looking at as well.
Beautiful.
Yeah. And then, I mean, there are other, you may see stuff about tax credits. I don't think that's going to apply to most mid-sized or even smaller mid-sized businesses, mostly for larger businesses under 500 employees. So sort of at that point, but if that applies to anyone, I'm happy to talk offline about the credits. It gets pretty wonky and I don't think it'll help most people, but it is an option for some if you see stuff floating around about that.
Cool. But that's kind of the next steps to take. There's a lot of question marks. You'd be paying attention to stuff. You should still run your business in a smart, profitable way that makes money and like takes care of your customers and all that other stuff. I think I see sometimes people trying to like circumnavigate building an actual healthy, strong business. And I would encourage everyone to build a healthy and strong business in the midst of all of this and take care of other people and pay people what you can for sure. Somebody did ask if you are taking on new clients at the time.
Yeah.
Or so the last question a bit would be, where do people go learn more about you or interact with Stansbury Weaver or hop into things if they were like, oh, I would like some guidance on this, maybe some more direct advising and guidance as a client?
Yeah, so you can check us out at stansburyweaver.com. We put together a PDF that outlines this stuff as well. So if you want a copy of that, get it on our website or email me or Adam. We'll send you over a copy of the PDF. If you want to reach out to us directly, though, our contact info is on the site. We are taking clients. You can, take a look at the way we work. It's a different business model than most law firms. We don't charge hourly. We do flat monthly rates on a subscription model or flat fees if you have a standalone project like raising capital, say, forming a new company. But a little different approach than most law firms. So yeah, check it out, and I'm happy to talk offline with anyone who's interested in looking at what that looks like.
I would encourage people, because I help with some of this too, so I see like what kind of information gets into it. But if you appreciated this level of just sort of walking through things, Mark and other partners at Stansbury Weaver every day pull together a bunch of information, or every day or every couple of days as clarity comes out. And this is an example of the one that just went out that was just about guidance and answer some of the specifics that are in here. There's just a whole bunch of we worked with Mark to put together a pretty nice PDF that's there that you can check out. So it's just trying to break down this information because there's an 800-page document that was done over a week, and there's so many different pieces of this. So as more information comes out, we're updating these things because since for the last 3 weeks, I'm not a lawyer, and sometimes people shouldn't be asking me these questions, but it's just confusing as heck. And so it makes sense that, and Mark's fielding questions like this all the time. So we're just trying to be helpful and let people know what to do. So if you have a question, you can probably direct message me or Mark or the Wonder Jam or Stansbury Weaver or anybody, and we'll send you some of that information. I would encourage you to subscribe to the newsletter. Like a lot of law firms, Mark and the partners like only send out helpful information, and they don't just spam email people all the time. So you're not going to get like 8 million emails hitting you up to try and sell you stuff. So yeah, thanks a ton, Mark. Appreciate it. Thanks everybody for asking questions. I hope we got them tackled. If you want to, the other thing that's true, and I try and be helpful and I try and get in front of Mark and partners and other people who are smart, is we at the Wonder Gym have a thing called the Gem Club. And the Gem Club is an online membership where we just talk about all sorts of business stuff around for small businesses, people who are growing their business, people who are just starting their businesses. We have courses around design, finances, all sorts of things like that. But then we also have ongoing discussion every day. So, and all of this stuff has been a big part of all of that. So we changed our pricing to let our online community be very accessible in this wild time, and we'll jack the price back up. when people are allowed to go back out to concerts. That's our thing. The first big concert that happens, price is going up for sure. Anyways, thanks to everybody for joining. Thanks a ton, Mark. Appreciate it.
Happy to help.